members, one and all of the Salivation Nation. Didn't get a chance earlier in the evening to comment on the Dow Jones Industrial Average breaking records and the pretty big drop for a second day in gold and silver prices. Kitco has been down, and that's another mystery in and of itself as to what's going on there. But nonetheless, we are seeing dips and slight recoveries in the precious metals now. Gold got down into just barely staying above $1,800. That was kind of the resistance point. It is now up to $1814.38 in the ask price here as we look at coininfo.com. And silver is up a dime, over $23.40 now, $23.47. Platinum is up, and it's actually the one metal that's holding pretty strong here through this. Palladium down slightly, but nonetheless, there you can see the charts showing the movements that we've seen. Silver, again, for a second day, getting hit, but not as smacked down as hard as gold was over the past 24 hours. Gold taking a pretty big hit, and we can see where its lows were there, barely hanging on to $1,800 there. Silver did dip down to right at $23. It did get just below that earlier in the morning. It was quite something to see. I did see these prices, but obviously was at work and could not do video right then and there. But fascinating to see. Let's see what some analysts are saying about what happened here. Obviously, this is much to do with the coronavirus vaccine news that's out there. And there's others that have speculated in the comments section that some of this was due to the COMEX deliveries and the like. But, I guess there is a chance that somehow they could try to squash the price down. But to me, that's a cabal that I just don't think they have that power to do. I really don't think that they're that powerful to be able to do that, to get this to happen, because of worried about people taking delivery and they don't want to be able to get people to sell. So they smack these prices down and people are cashing out or what have you. I kind of understand the dynamic behind it or how that could be the case, but I've never seen any evidence that that is occurring at the COMEX. Just don't see it. But I do think, though, if people do want to take delivery of gold and silver, if the COMEX delivers, well, you'll see the prices go up dramatically because I realize there's a shortage. And by the way, there is a shortage. I mean, as far as taking delivery, there's not enough gold and silver out there to take delivery for all the paper contracts. I think that's news that shouldn't surprise anybody. But they can do that because they mostly don't have to. They don't have to speculate. They don't have to prove that they've got it. In other words, people aren't going to cash out for 1,000-ounce bars or for good delivery bars or what have you. And the ways to be able to move in position for people to actually rent that gold out, and they can make money on it too. And that's how the big banks make the money on the gold. But this is from Bullion Vault, and this is an interesting article. It says its gold price has lost of 2.5% from yesterday's plunge worsened in Asia and London hours Tuesday, pulling the metal down to a new 4-month low in wholesale bullion trade as positive economic data and more COVID vaccine news coincided with U.S. President Donald Trump's effectively conceding defeat, which he did not effectively concede defeat. That's wrong. What happened was he allowed for the transition for the protocols to continue, but you can do that without conceding. He may not ever concede. In fact, one thing I will remind, Hillary Clinton advised Joe Biden to never concede. But nonetheless, this is a transition, beginning the transitioning process, but it does not mean, and that's important for the markets because there are going to be legal challenges. And what if one of those legal, and again, this is an uphill battle, and I fully realize that now, and there's some of these court battles, but according to the Rudy Giuliani, the head of the legal team, their goal is to get through these fairly quickly and understand that they're going to be turned down by the lower courts, and ultimately this will be decided no matter who wins, then will be appealed all the way up to the Supreme Court. So his feeling is let's get it up there sooner than later, because that's the ultimate adjudicator. And then we'll see where it goes from there. But nonetheless, it is wise for the president to begin that process now. I think it's now time, and that was a good thing to do. But again, it does not necessarily mean that there's a concession that's been done. That's important for the markets, because if there is some news that breaks that the Supreme Court rules in favor of Donald Trump, then we've got an interesting crisis on our hands, because that means that this may be pushed back to the House of Representatives or state legislatures. And then we're talking about unmarked territory with our election process, which will cause havoc in the markets, I believe. But government bond prices were little changed in contrast, helping inflation-adjusted U.S. interest rates slip to their most negative in nearly 3 weeks at negative 0.87% as market expectations for the cost of living ticked higher. But gold prices, more closely tied to real U.S. rates than before in summer of 2020, still fell to $1,804 per ounce, down 13% from the start of August record high of 2,075. Did it get up that high? I thought it was 2,060, but maybe it did get up that high. And here we can see the real rates versus gold, and where that is. So fascinating indeed to see. And it says that Janet Yellen, as Treasury Secretary, announced today by the administration, by the incoming, by President, quote, elect Biden, Vice President Biden, is going to nominate Janet Yellen as Treasury Secretary. And it's a huge plus for markets, the Financial Times quotes Chief Investment Officer Dan Scott at $300 billion wealth managers Vontobel, commenting on Biden's overnight announcement of his key economics team. Interesting. So they're all giddy about it. Janet Yellen, who was in charge of multiple rounds of quantitative easing during the Obama years, replaced by Trump as U.S. Fed chair, Reserve chair just after one term. She's highly competent and has a long history in basically understanding the limitations of monetary policy, Scott adds, meaning that Biden's fiscal stimulus plans will take center stage. Of course, they want the limitations of monetary policy. I don't understand that long history of understanding limitations. There's no limitations of monetary policy with Keynesians, and that's what she is. That's a very interesting quote that he would say that. But stock markets rose everywhere but China, extending the MSCI World Index rise back towards this week's new all-time high. Silver stabilized after hitting a one-month lows at $23 per ounce, while the price of platinum, which also finds over 50% of its net annual demand from productive uses, rallied to $978, near a 2-month high when reached late last week. And this is a bullish for platinum, could hit $1,000 soon, while these other metals are down. And so very interesting to see where things are going to play out for sure. And we saw Monday brought much stronger than expected U.S. manufacturing and service sector activities, surveys for November. Tuesday morning saw Germany, the largest single economy in the 19-nation Eurozone, the world's second largest economic bloc behind the USA, revise its third quarter GDP figures higher, showing only a 3.9% year-on-year drop against the initial 4.1% estimate. And so yes, and Shanghai gold prices fell to the lowest since May in yuan terms, reduced their discount to London quotes by $1 to $18 per ounce, suggesting continued weakness in domestic gold demand over supply in China, the metal's number one consumer market, as new data showed a fresh slump in bullion imports via Hong Kong for October. A lot of this stuff can play with what's going on here in the London bullion market as well too, and in New York, especially with COMEX and the like, and how this can occur. So keep in mind that there's a lot more complexity to some of this stuff than some would think, especially if there's less demand here. Skipping down here, Both the world's largest gold-backed ETF investment trust shrank Monday, with SPDR products seeing a 0.6% liquidation to its smallest since mid-July, while the smaller iShares Trust saw a fourth consecutive day of outflows. Open interest in COMEX gold derivatives contracts meantime rose. Given the technical forces in play, said O'Connell, it is likely that short-side trades were triggered more so than long liquidation. And so, yeah, let's see. Trading volumes in U.S. COMEX gold futures and options leaped 69% on Monday from Friday's turnover, reaching the highest since the 9th of November, when gold prices lost $100 per ounce on the first Western vaccine announcement from Pfizer. Commodities, meantime, extended Monday's 1% gain in the S&P GSCI index today, adding another 0.5% by lunchtime in London, with crude oil adding 1.5%, gasoline 2%, and U.S. heating oil 2.2%. So yes, very interesting news indeed today. The Dow Jones broke 30,000, all-time high. And is that a bubble? Is that an artificial bubble? I think part of it is. I think we're still seeing some of the bubble from previous rounds of quantitative easing from years back. We've never really gotten over that to some extent. It's not the actual economy. And I think there's a lot of obviously other factors here too. The dollar index, the markets like stability. And I believe that some of this usual news, even though it may not necessarily mean a whole lot, just the perception of it is somehow playing with these prices too. But nonetheless, it does provide a buying opportunity, because I don't think these prices are going to last long. But as I warned yesterday too, just because it's a buying opportunity doesn't mean that you should be buying. It all is up to your personal situation and what have you. And there's a time when it's wise to not buy when the prices dip like this. And even if the prices go up again, when you could have had the opportunity, some of that money could have been better spent paying bills or paying down credit and that type of thing. It's really up to you. It's up to your personal situation. But again, a good buying opportunity that presents itself should be looked at with the utmost caution and analyzing your personal financial situation and yes, indeed, and liquidity with what you have to spend. So there you go. Fascinating indeed. We'll see where the markets go. Prices, again, starting to recover slightly from where the lows that we saw earlier in the day. So I hope you found this video useful. I'd like to extend a multitude of gratitude to you all for taking the time to watch, and encourage you to please rate, share, comment, and subscribe.